The starting numbers are in for 2025, and we are still holding on to a slight seller's market in Scottsdale. However, there has been some weakening in the market as a whole, and we are actually in a buyer's market if you consider the entire Phoenix metro area. So sellers, let's not get too excited because we are trending towards a balanced market. So if you are looking to sell your home, it's important not to push too hard on the slight seller advantage. Let's start by looking at the national economic data as a whole. We had a pretty crazy week last week for politics, and markets saw the mortgage rate shift closer to the sixes after peaking at 7.25% in January. The recent trends in inflation were encouraging, but the jobs report could set the tone for bond yields and mortgage rates in the next coming weeks. The Bureau of Economic Analysis's inflation was flat at 2.8% year over year. But if you look closer, the monthly trend was very encouraging. Over the last 6 months, the core PCE has risen by 1.13%. If you annualize that, you would get 2.25%. Over the last 3 months, core PCE has risen by 0.54%. That annualized is 2.15%. The Fed's target for inflation is 2%, so if you look at those monthly numbers, we are getting very close. Job openings also fell significantly. The job openings and labor turnover revealed that total job openings had declined from 8.15 million in November to 7.6 million in December. The hiring rate was flat at 3.4%. The quits rate was also flat at 2.0%. In general, companies aren't hiring much and workers aren't quitting much. Now, on Friday of last week, the Bureau of Labor Statistics job openings report came out, which is historically more likely than any other report to cause the biggest ups or downs. Going into the end of last week, the BLS employment report expectations were for 170,000 jobs to be added in January, with the unemployment rate stable at 4.1%. Now, that report came out with the actual numbers at 143,000 jobs, with the unemployment rate edging down to 4.0%. So overall, not too far off the estimates, and that was reflected in the mortgage rates. The 30-year fixed rate is just over 7%, while the 30-year jumbo rate is at 7.3%. Now, the next thing to look out for is the January CPI report, and if that comes out better than expected, we might start to see rates drop into the high sixes, which would be great for our spring selling season. Now, let's talk about Maricopa County and the Phoenix metro area as a whole by looking at the Cromford Market Report Index. For those who aren't familiar, this index provides a short-term forecast for what's going on in the market. It's derived from trends in the pending, active, and sold listings compared with what went on for the last 4 years. Values below 100 indicate a buyer's market, while those above 100 indicate a seller's market. A range right around 100 is a balanced market. Currently, the breakdown is as follows. 5 cities have shifted into a buyer's market. Now, 4 of them are considered a balanced market, and 8 are still remaining a seller's market. However, of those 8, only 2 saw an increase towards a stronger seller's market, while the other 6 showed some signs of weakening. Scottsdale saw a 3% decrease. Overall, if the market trend continues to shift downwards into a buyer's market, as a seller, you want to get ahead of the market if you want to sell quickly. Now, let's dive into Scottsdale by looking at the Altos research reports. Similar to the Cromford Market Index, Altos is showing a slight seller's advantage in the market, but just a slight one. You can see that we are close to a balanced market. The market's not shown strong directional trends in terms of supply or demand, and inventory right now is still sufficiently low to keep us in a seller's market, and prices have been moving up as evident. However, we are starting to see an increase in inventory. The 90-day average is 1,258 homes on the market. Now, that's not that big of an increase from a month ago, which was an average of 1,258 homes on the market, which is only about a 0.4% increase. Going back further, you can see it's about an increase of 23% from this time last year. if inventory continues to go up and we don't see a matching increase in demand, we could shift towards a buyer's market. Likewise, we're seeing another increase in days on market from this time last year to today. Now, for the days on market, a shorter time can indicate a hotter market, while a longer time indicates a cooler market. Now, keep in mind that days on market are calculated from when a house is listed to when it goes under contract. If you're trying to calculate how long it will take before your home officially closes, then you want to add about another 30 days on top of that to get the average closing time in Arizona. Anyway, from last month, we saw an increase of 4.5%, and we saw a year-over-year increase of about 22%. Now, moving on to the actual numbers. At the end of January, there were 1,643 homes on the market, which was an increase of 16.3%. with a median list price of $1,599,000, which was a 1.2 increase month over month. Now, in good news, the number of new pending listings increased 22.2% from last month, and the number of total pending listings increased 21% since last month. Now, for those who don't know the difference, new pending listings represents the number of new under contracts we have had in January, while the pending listings is the number of total pendings that we saw at the end of the month. But it is a good thing that both of these numbers are increasing, which shows that we have a little bit more demand. Now, the median list price of all pending listings did drop 14.8% since last month, which does indicate that we are seeing more of that activity in the bottom and lower quarters of the market. Now, moving on to the sold listings, the median sold price was $1.3 million, which did increase 15% from last month. The number of sold listings did decrease a bit, which is actually to be expected, since these would have been homes that went under contract in December or possibly the end of November, which is a very slow time for us. The sold to list price ratio did decrease to 96.5%, which means that homes are selling for about 96.5% of their list price. This gives you an idea of how much negotiating power there is in the market. And you can see that over the last year, on average, this number has been dropping as we trend out of a stronger seller's market. Now, about 43% of all homes on the market are also seeing a price reduction, which does not factor into that sold to list price ratio. The sold to list price ratio only takes into account the final listing price of the home before it went under contract, not the original listing price. Now, new home sales are also losing market share and are about 22% of all homes sold in the marketplace. For the past year, builders have taken on a little bit more market share as they were able to offer lower mortgage rates when buyers use their in-home lender. But in recent months, this advantage has eroded. Sellers of existing homes can compete with this by matching similar incentives that the builders are offering, a strategy savvy agents can help with. Now, mortgage rate buy-down activity increased last year, with Arizona seeing the largest increase. Now, a mortgage buy-down is something that a buyer can use to temporarily buy down their interest rate. Typically, we see a 2-1 buy down, which means that the mortgage rate for the buyer is 2% below the current market rate for the first year, and then 1% below the current market rate for the second year. Buyers like that, in addition to the hopes of potential savings when they initially purchase. Now, a buyer cannot actually pay for a mortgage buy down. That has to be something that is a seller paid concession. So Arizona is one of the most popular states for a mortgage buy down, with 8.3% of all mortgages having a temporary buy down. And if demand doesn't increase to match supply, buyers will have more negotiating power to ask for these or other similar concessions. By analyzing these metrics, you can better understand the current market conditions and make informed decisions when selling your home. It's important to work with a knowledgeable realtor who can help you navigate these factors and guide you through the selling process. Check out my next video, or if you're ready to sell your home and want to know what the market is doing at your neighborhood level, reach out to me using one of the links in the description box below.